Good evening, Namaskar. I welcome you all in our income tax session. This is our revisionary session number 2. And today we will be discussing the revision of salary and income from house property. So I believe you all are studying really hard to achieve the goal of your life to become a chartered accountant as soon as possible. I am C. Ankit Sharma, your income tax faculty for today's session. And as we are going to revise one of the most important topic, which is salaries, which is one of the important head of income also. And this is the first head you encounter with when we start the heads of income topic. Under the head salary, there are multiple provision. It is a gigantic topic. It includes basic salary concepts, then advanced salary, area of salary, multiple allowances provisions, perquisites, compensations, then gross salary calculation, and also the provident fund contribution provision. Then there are deductions like standard deductions, then professional tax deduction, entertainment allowance deduction, and also there are some allowances which are exempted under or not allowed to be exempted under default tax regime. There are certain allowances, those are having some exemption under default tax regime, and also this provision continue under perquisites also. So whenever there is a question of salary, in my opinion, it's very, very important to check whether do I need to solve that question under default tax regime or under optional tax regime. In the same way, income under that house property, that chapter also having some impact if you are falling under default tax regime. Under self-occupied property, there are some restriction on claiming interest. There are some restriction to carry forward losses and sort of if you are under default tax regime. So in any chapter, according to me, whether it's house property, salary, business head of income, capital gain, and other sources, first of all, you should check, do I need to solve this question under default tax regime or optional tax regime or under both regime? That could also be possible. And definitely, you should recall once what kind of deduction I cannot claim under default tax regime, what kind of exemption I cannot claim under default tax regime in that particular chapter. So today, as I have discussed in the last class, we will see the due concept of salary provision, the range concept of salary provision. Sakshi Kumari saying, sir, me not able to join on Zoom, please guide. Sorry, Sakshi, I don't know how to do that, but you can still watch on YouTube, I believe. So good evening, Gayatri. Good evening, Golika. Good evening, Ram. A very good evening to all of you. And generally, I do not share thought for the day or story things during our revisionary class. I only share stories if you have joined the basic LVC lectures in which we have discussed each chapter in detail. There I always share a thought for the day, motivational story for all of you in each and every class. And generally, I do not do this in the revisionary class, but there is a very special quotation I have encountered with like 2 days before. And I believe I should share that with you because it actually impacted me very, very hard. And in the situation, I believe that quotation with that thought, which I'm going to share with you. So it was very, very impactful. So that's why I really wanted to share that with you. And that is, you can see this. And you can, if you can understand this quotation, you will feel how powerful this quotation is, how positive this quotation is over there. And definitely that can change the mind, the thought process, which maybe some of you are actually going through. And you can say what it says. It is all about the positiveness. And this quotation says that sometimes when you are in a dark place, so maybe if any one of you was not able to clear this attempt, and maybe you are feeling that you are in a dark place, you are in depression, you are feeling not good, you are struggling with a lot of things. So maybe you think you have been buried. Buried means you are in a depression, you are feeling bad. That is actually the relation of this quotation. But think in another way. Think, but you actually have been planted. Just like a plant, when it has been planted, there is darkness all around. but you not feel depressed. Just believe in yourself and just feel that you are not in a dark place, but you are just planted and you are going to grow and you are going to grow like a chartered accountant. That the sunshine is waiting for you. You just need to buckle up. You just need to believe in yourself, just need to give your best, and you would be out of that darkness. So I really wanted to share this thing with you. It was very powerful, and I hope you can also connect with this quotation. So if you are feeling struggling with your studies, you're not feeling good, just imagine that's just a bad time. And if you are be confident, focus, you are just like a planted, and then the future will be yours. So that was the thing I would like to discuss with you. And now we are moving on to the salary topic. Today we will solve some MTP and some past year questions, some case scenario. But before that, as I have told you, that first of all, we will discuss the concept of range salary provision. And if that is not due during the month, that is very, very important. I have seen there was a question in, I guess, in case scenario or MTP in which there was due concept was there, or I guess in test your knowledge questions. So that kind of question can come in the examination and under the salary head. The first thing to check is under default tax regime or under optional tax regime. This thing you need to check first. Always try that my basic salary should be correct. Basic salary calculation should be absolutely correct, because if basic salary calculation goes wrong in the question, let me tell you, that would hit your marks badly. Because everything, or I can say 70 to 80% calculation in a question is depend upon the calculation of basic salary. Because in that case, your rent-free house would be wrong, your house rent allowance would be wrong, your gratuity, your leave encashment, voluntarily retirement, retrenchment, even your other allowances, that is going to be wrong if the basic salary calculation is not correct. Okay, so these things you have to kept in your mind very, very strongly, that I have to solve these. Should not be any mistake in the calculation of basic salary. Now, generally, the basic salary has been given in the question like 50,000 per month. I guess there is some background sound. Raghavji, I guess there is background sound. So can you handle it? Bhargavji, there is a background noise. Somebody needs to mute, I guess. Someone is not muted. Who is talking like this? Let me call Mr. Bhargav.
We want to create a science center.
Hello?
And for that, I'm applying for grants from different institutions.
Yes, sir.
भार्गव जी, ये पीछे साउंड आ रहा है एक्चुअली, काफी डिस्टर्बिंग पीछे
मैंने लॉक कर दिया.
ओके, अभी भी आ रहा है गेस. हो गया, ठीक है, फाइन, थैंक यू. So moving ahead, as we were discussing that generally the basic salary has been given in the question like 50,000 per month or 60,000 per month, etc. But there could be questions in which basic salary could be given like this. Suppose it's 50,000 dash 4,000 dash 60,000, and there would be a date. There would be a date which will tell you that the salary range position is effective from which date. Suppose it has been given in question 1st November 2023. Any date could be there. So what is the meaning of this range salary? Technically, this range salary explain that from 1st November 2023, the employee salary is 50,000 per month. And exactly after 1 year, that means from 1st November, is going to be increased by 4,000 per month. So this means the range of increment and the salary would be increased by 4,000 rupees exactly after 1 year. So from 1st November 2024, now salary would be 54,000 rupees per month until it reaches to 60,000. Once salary reached to 60,000, it would be fixed 60,000 per month for future. So that means technically, if I'll show you from 1st November 2025, now the basic salary would be 58,000 rupees per month. So that is the meaning of range salary question if it is given in the examination. So what we need to do, whatever the date has been mentioned for the purpose of this range salary, exactly after 1 year, the salary would be increased by this value which has been given as the increment. So now suppose if I'll ask you that in my previous year, 24-25, which is applicable for your examination. That means I have to cover from 1st April 2024 31st March 25. So can you tell me in this duration of 12 months, how many months salary with which amount? How many months salary with which amount? So you have to tell me how many months salary with which amount. So I would be able to calculate the correct salary. So it's pure mathematical. There is no income tax concept is going to be there. So you would need to solve with income tax provision. This is just a simple mathematics. So from the information given above, now you need to tell me that in this previous year, out of these 12 months, for how many months salary would be 50,000 or 54,000 or 58,000. So I wanted to see if anyone can tell me how many months for which range of salary should I take in case of basic salary. Okay. Mr. Ram is saying 8 months 54,000 and 4 months 58,000. 8 months for 54,000 and 4 months for 58,000. Are you sure about it, Mr. Ram? This is simple mathematics. The duration I need to consider is this. Kindly read the question and apply the provision. Miss SH is saying 5 months 58,000. Gulika is saying 50,000 for 7 months. Almas is saying 7 months 50,000 and 5 months 54,000. Let me tell you, students, as I've told you earlier, if the calculation of salary, basic salary goes wrong, everything is going wrong. So be very careful when there is basic salary calculation is required on the basis of range question. Kavya is saying 50,000 for 7 months, 54,000 for 5 months. Exactly. Correct. We just need to see that if the salary has been 50,000 per month from 1st November 2023, and that is going to be increased from 1st November 2024, 54,000. So what should be the salary on 1st April 2024? That duration would fall between this. November 23 is 50,000. So December 23 again 50,000. January 24, 50,000. February 24, 50,000. March 24, it's still 50,000. And from April also, how much it would have been? 50,000. Because it will change from 1st November 24. It will change from 1st November 24. And we have to check from April. So technically, April 24, May, June, July, August, September, October, November, December, January 25, February 25, and March 25. These are the 12 months. So what is the confusion in it? That is not a very complicated calculation. It's very simple calculation. So in April 2024, it would be 50,000 per month. And from where it would have is going to be changed? It's going to be changed from 1st November, it would be 54,000 rupees per month. So from April till October, the 7-month salary would be as per 50,000 per month. And from November, December, January, February, March, these 5 months salary would be 54,000 rupees per month. Understood? Now let me tell you one more thing. This situation will prevail when the question says salary due in same month. This is also very important information. If the question is silent, then also assume salary is due in same month. Or if question is saying salary due in same month, whether it has been due on the first day of the month or on the last day of the month or between in the month, it does not matter. If the month does not change, if salary is due in the same month at any day, this calculation would be like this. But suppose there could be a change, there could be a scenario, there could be a situation. Suppose if questions say, if I change this question and I say in above question, suppose salary is due in next month. Salary is due in next month. That means April salary due in May, May salary in June, June salary in July, July salary in August, August in September, September is October, October salary due in November, November salary will due in December, December would be in January, January salary would be in February, and February salary would be in March. And March salary will be due in April 25. So this March salary will due in April 25. So technically, we need to consider till the February salary because it has been due in March. In March, February salary has been due. And technically, if April salary is due in May, so in April, which month salary is going to be due? March 24 salary. So now, during April till March, if I'll see the duration from April to March, now the salary is due from March 24 till February 25. 1 month will be shifted forward. Because in March, I will due, in April, I will due March salary. And of course, April salary will go 1 month forward. May salary will go 1 month forward. So on, technically, now in this 12 month, which is April to March, now in this duration of April to March, salary will be due from March 24 till February 25 because of this single line. The whole thing will change. So in normal case, April till March salary is due. So we have to do the calculation and we have find out that this would be my basic salary in this scenario. Now suppose in the exam, if question says that salary is due in next month. So if it has been done, then the change would be like this. Then from 1st April 2024 till 31st March 25, the due month would be March 24 till February 25. So that would be again 12 months, but 1 month will shift to the forward. So my March salary, March 25 salary will shift to April in the next year. And so on, the last March salary would be shifted in my April 24 salary. So what would be the impact upon my basic salary? So now the impact would be this, 8 months of 50,000 salary. Why? Why it is happening? Because now from number 24 salary month would be salary. And 4 months is 54,000 per month. How much was March salary? 50,000. Now that has been included in this duration. So my 7 months till October salary as well as the last month March salary, they also become the part of my range. So now technically my salary of 50,000 would be 8 months and 54,000 would be 4 months. Now, if you do not want to understand this thing as per logic, then I have a trick also. And I guess in this case, trick is better than the logic. First of all, whether salary due in same month or whether salary due in next month, it is irrelevant. Suppose in the question says, suppose salary is due in next month. Just forget about it. Do not think about it that salary is due in next month or same month. Find out the salary, always assuming, always assume. The right thing to solve these kind of question is, from the point of view of examination, whenever this range question is being given, this is only applicable in case of range question. If there is no question of range, suppose salary is 50,000 per month, that's it. No range has been given. Then it does not matter whether it's due in same month or next month, because automatically it would be 12 months anyhow. And because salary does not change, so it does not affect. But if there is a range salary, then the fixed rule first is always find months, assuming. Even you have read this sentence in the question that it has been due in next month, just forget about it. Assuming that due in same month. And that would be really easy because it's a mathematics process. So even suppose in this question it has been written that it is due next month, I will forget about it. So if I am going to find it out assuming that the salary is due in same month, so what would be my calculation always? 7 and 5. 7 into 50,000 and 5 into 54,000. Correct? Now I have to apply this concept without logic, but with having a very interesting trick. If they say that salary is due in next month, then just add 1 in the upper limit and reduce 1 in the below limit. So that means that would be 8, that would be 4. Aggregate would be always 12. Nothing to worry. So automatic my now salary calculation would be 8 and 54 multiplied by 4. Suppose they say that salary due in second month, not even next month, next to next month. Again, not to worry, we have the trick. We will solve it as assuming it is due in same month, 7, 5. Generally, only next month provision has been given in the question. But of course, we have a trick, so we can solve it in any case. Now, because 2-month gap is there, not in next month, next to next month. Now, what we need to do? Add 2, reduce 2. So now that would be 9, that would be 3. Aggregate would be always 12. Understood? So if there's a range salary, it's my advice, always calculate your basic salary assuming that it is due in the same month. Whether question says it's due in same month or next month, nothing to worry. Just solve it as per mathematically how many months salary has been due, assuming that it has been due in the same month. If it's say due in next month, then just add 1 month in the upper limit and reduce 1 in the lower limit. And if it's say 2 months due, then plus 2 and minus 2. Practically, there would be only 1 month due system may be provided in the question. Understood? So that was the case what we were discussing regarding range salary and which was due in the next month or next to next month. Again, relief question also very important. Rajbir is given the answer. Okay. So relief provision also important. So under salary, there is a relief arrear of salary. In case of arrear of salary under section 89, you should go through with that also. So what steps I have told you before solving a question of salary today, that please always check whether we need to solve that question under default tax regime or under optional tax regime. And the second thing is very important, that please calculate your basic salary very wisely. So if you are able to solve your basic salary first, Then after that, always add all monetary payments. After basic salary, it's an advice to you. Kindly find out all monetary payments from the question and solve them before calculation of only perquisite. So that's a basic format. Always find it out all monetary payment first. So basic salary, then arrear of salary, then advance salary, if any in the question. Generally, arrear of salary, advance salary does not in the question generally. Then taxable portion of all allowances, I have to find it out, taxable part. So they all are monetary. So it's very important to find out the monetary salary. After the allowances, compensations. They are also monetary, like gratuity, pension, etc. But that would be in the question in the case of only retirement. So in case of retirement, there would be compensation like gratuity, leave encashment, etc. If there is no retirement and you receive compensation, that is going to be 100% taxable. Compensation then comes perquisites and provident fund provision. So provident fund contribution and perquisites after that. These are non-monetary. So that would be my gross salary. Why this monetary amount I'm asking you to calculate firstly before solving the non-monetary payments? Even answer would be the same. Even if you solve monetary, then non-monetary, then monetary, still the answer would be same. But why I'm asking you to please follow this format of monetary initially without taxability of non-monetary? Because there is a reason. When you need to solve rent-free house, and that would be always in the question. If there would be a salary question, I believe in 90% cases, the rent-free house calculation would be there, always there. Okay. So for the purpose of rent-free house, can you tell me what is the meaning of salary? What is the meaning of salary in case of rent-free house? Anyone? Who is going to tell me the meaning of salary in case of rent-free house? Mrs. Gayatri is saying perquisite. Rent-free house is a perquisite, of course. But to calculate the rent-free house perquisite, we have to take 10% of salary in some case, 7.5% salary in some case, and that 5% salary in some case. Okay. So I'm just asking what is that salary means in that case? Okay, Arjun Singh is saying, sir, illustration 10 of salary, please explain once. Illustration 10 of salary is regarding the taxability of perquisite under rule number 3B, I guess, in which we find out the provident, the contribution to NPS if it is exceeding 7,50,000. Then the interest and accretion perquisite, we need to find it out with that formula of TP is equal to PC upon 2. I guess you are talking about that question, Arjun. Yes, I can explain that, Arjun. But before that, we have to go through once with the provision. So after this discussion and before taking up the MTP, I will discuss that illustration number 10 with you. Do not worry about it. Okay, so Rama, all except DA not forming employee contribution exempted perquisite medical lump sum. Nagaraja is saying basic pay, DA commission. Okay, Almas is saying BA, DA forming part, bonus, commission, all monetary income allowance. So Almas is actually your answer is too accurate till now. Manju is saying allowance plus basic salary plus bonus plus commission plus DA plus monetary item. Shagufta Parveen is saying basic salary, bonus, dearness allowance, commission. Miss Khushi is saying basic DA forming part of retirement benefit, percentage commission, and all monetary allowances. Gulika is saying basic DA forming part of retirement benefit, bonus, commission, taxable allowances, and all monetary payments. Shagufta is saying all monetary allowances. So the correct definition is all monetary payments. But DA only allowed included if it as per terms of employment. So why I was saying that you should follow this format. First of all, in the question, you have to solve all monetary payments provision, whether it's basic, arrear, advance, all allowances, etc. So if you have solved that question in this format, and if when you start solving perquisite, there would be a rent-free house provision and you need to calculate the salary. So you do not need to calculate salary separately. You are having basic salary over here, all taxable portion of allowances. Let me tell you, arrear of salary and advance salary will not be included because salary should be included on due basis. And arrear and advance are monetary, but we cannot include that for the purpose of rent-free house perquisite. So basic salary, all allowances, bonus, commission, all monetary payment. So the provision says all monetary payments, but DA as per term and will not include arrear of salary and advance salary. It has not been specifically written over anywhere, but because it has been referred that the salary would be taken on due basis. So salary, we only can take that basic salaries. That's why advance and arrear of salary need to be ignored for the purpose of calculation of monetary payments. Understood? So because if you're following that format, so you would be easily able to find out what content I need to consider for the purpose of calculation of this rent-free house. And let me tell you, if compensation has been received during service, then this monetary also become the part of my rent-free house calculation salary if that has been received during service. If it is after service, then of course there would not be any rent-free house after service. So till that time duration, we can take the monetary payments. I hope it's understood. So for rent-free house, follow that format for the purpose of solution. Now, Rajveer wants to know about illustration number 10. Let me show you. Illustration 10, exactly a very complicated, of course, question. Salary, that was in salary part 2. Before understanding of that illustration, we do need to understand the provision first. So as you can see, let me show you the provision because that illustration is having some different kind of calculation. And for the ease of students, I have prepared a very interesting format to understand the concept of it. So you must be asking about this, Rajveer, the calculation of this perquisite. And this perquisite calculation says, if there is a contribution exceeding 7,50,000 rupees into RPF and NPS and approved superannuation fund, then we have to calculate perquisite. The annual accretion on this excess payment, which is exceeding 7,50,000 by way of interest, etc. We have to calculate that perquisite under section 17 to 7A. And for that, rule number 3B has been prescribed for the purpose of calculation. So section 17 to 7A, you are asking, correct? And that is a formula which you have to solve to calculate this perquisite. And I believe in the study material, which has been prescribing rule number 3B, which has been derived from income tax rules, of course. So the language is quite difficult. The language is difficult. So I have been decoded all these formula point in a single line of understanding. So you do not need to read all this concept to understand what exactly we need to select for the purpose of solution. Just focus on these things. That PC means, look, TP is taxable value of perquisite. What we do need to calculate. PC means the contribution to provident fund. And it says amount or aggregate of amounts of employers' contribution in excess of 7.5 lakh to recognized provident fund, NPS under section 80 CCD, an approved superannuation fund during the previous year. So this language has been decoded in only one line. So PC means employer contribution to fund exceeding 7,50,000 in current previous year 25-26. So employer contribution, if in current year, like your current year is 24-25, these notes belongs to previous year 25-26. But in your exam, this would be 24-25. Just ignore the year. So the PC means employer contribution to fund exceeding 7,50,000 in current previous year. Suppose employer contribution is 8 lakh. Then what should be the PC? The PC would be 50,000 rupees. Understood? Clear? First point, what is PC? Contribution would be given in the question, or the information to calculate that requirement to calculate that amount would be given in the question. Rajveer saying, sorry, Arjun was asking that question. Yes, Rajveer, sorry. Arjun was actually asking that question. So Arjun, clear what is the meaning of PC? The contribution which is excess of 7,50,000 need to be considered in place of PC. Now what is PC1? Now if you read this language, this is so complicated. That amount or aggregate of amount of employer contribution in excess of 7.5 lakh to RPF, NPS, etc., etc. And I have decoded it in the simple line. Now, aggregate of all preceding year employer contribution. So, PC was current year employer contribution exceeding 7,50,000. Now, PC1 is all previous year employer contribution to Provident Fund, which is in excess of 7,50,000 if any. So contribution of all preceding year. That means from previous year 2020 till 24. For your examination, that would be 24. 25 is for assessment year 25, 26, 27 students. So PC1 is clear, and PC2 is nothing. PC2 is PC of preceding previous year aggregate. That would be also given in question. Now, what is TP1? The TP1 is if you have calculate this perquisite taxable value. Now, your previous year is 24-25. And we are calculating TP for 24-25. For that, we have taken PC1. That means current year contribution exceeding 7.5 lakh divided by 2 into R. And this was PC1. PC1 was, as per point number 2, the preceding year aggregate contribution exceeding 7.5 lakh plus TP1. Now TP1 is if in the preceding year like 23-24, in 23-24, if you calculated TP for 23-24, that means last year TP value, that would be called TP1. As same, PC means current year exceeding value. PC1 means preceding year aggregate exceeding value. In the same way, TP is current year calculation, what we are doing, and TP1 means preceding year taxable value of this perquisite, if any. Aggregate of this perquisite value in all the preceding year. That would be TP1. Then R is very important in this situation. R is income, I upon F average. So I stands for income of previous year. And for your income of previous year means previous year 24-25. Income of previous year we have to calculate, and that is I. How do you need to calculate? The information has been given over here. Ignore that information. We have the decoded principle. For the purpose of calculation of I, you have to take balance of fund as on 31st March 25. That would be given in question. Balance in the provident fund, aggregate balance in the provident fund on 31st March 25. Reduce employee contribution of current year, previous year 24-25. Reduce employer contribution of previous year, that means 24-25, and reduce the opening balance of fund. This is technically closing balance of fund, which is on last day of my previous year. And now opening balance of fund. Opening balance matlab the 1st April 2024 fund value. So if out of the closing balance of fund, I will reduce employee contribution, employer contribution, and opening balance of that fund, that would be my income. So that would be the I. So closing balance, reduce employee contribution, employer contribution of current year, and opening balance fund value. The balance would be your I, that is your income. Now what is average? If you are able to calculate I, the average is most easy to calculate. Average would be opening fund value plus closing fund value divided by 2. That means this value and this value divided by 2 would be my F average. That means fund average. So that has been explained in the last point. So what is the F average? That means opening one fund value and closing fund value. So that would be on 1st April 2024 for your examination plus 31st March 25 divided by 2. That would be F average. Now the example you are talking, Arjun, that is actually in very detail, and we have to put at least 30 minutes to understand that example. So here is a good news for you. On, I guess, 13th November, that means on Saturday, day before yesterday, yesterday only, today is Friday. So yesterday at morning, I have discussed that example with the students. The illustration number 10 has been discussed at the end of the class. So if you will want to check the solution of that example, you can see the class CA intermediate for assessment year 26-27. And that would have been on 13th of November, morning class 7 to 9:30. And in that class, if you will see the post-break session, in post-break session, I have discussed this perquisite in detail and the illustration number 10 also. So you can go through with that example. It has been discussed each and everything in detail. Just year would be 26-27. You have to understand from the point of view of 25-26 assessment year. Everything else is exactly same. I hope you got it. Yes, Arjun, it's very technical, but once if you're going to see that class, in that class, I have also explained this thing very, very clearly and slowly with the help of example. And after this explanation, we have discussed the illustration number 10 also. So definitely you will understand if you'll go and watch that class, it would be there. Any issue even after watching that class, you can ask me that issue in the next session. And let me tell you one more thing. Today is the, tomorrow is the last session of salary in that batch in the morning. And in the starting, I will also explain that example problem in the tomorrow's class also. So you can watch the starting of that class tomorrow also. So you would have some more clarity on this. Okay. Because in this class, I just wanted to discuss some previous year question. And if we'll go to discuss that illustration number 10, that will consume a lot of time of our class. So it would be better that kindly go and watch that class. So that would be really easy for all of us. Fine. So moving on to now MTP, RTP, etc. So you would have an idea what kind of question can be asked from salary and income from house property. So let me discuss with you, first of all, the paper May 25. May 25 question we are going to discuss. And in May 25, question number 3A, that was related to salary as well as house property. In my opinion, house property is a comparatively easy chapter in respect of all other heads of income, I believe. Clear? And I guess you also agree with me that house property is having certain normal provisions, not that much complicated. If you are able to calculate the number of houses and for which purpose it has been used, and if you'll keep in your mind to calculate the pre-construction period interest and and current year interest, then I guess house property provisions are not that difficult. They are easy. They are very easy to understand. You just need to calculate the correct annual value, etc. And just you should keep in mind that under default tax regime, in case of self-occupied, we cannot claim any interest deduction. And that interest loss even cannot carry forward, etc. And there is actually one question, in my opinion, in case of that uh, house property, when there is vacancy, when property is let out. That is only a technical point to understand how to calculate GAV in that particular case. And this is the question which is related to point number F, that the point we are discussing. In case of house property, there was a situation when there is a property which is let out and vacant also for some part of the year. So that kind of question is only having some specific kind of calculation. And the good news in question number 3, what we are going to solve, there is salary provision as well as house property. And that case also in this question, what we were just discussing, vacancy and let out. Okay. So one by one, we will read that question and we will solve salary and house property provision. Arjun Singh tomorrow I will be present. You can continue, but Arjun, one advice and one request from my side to you also. Before watching tomorrow's class, please watch the yesterday class, post break session when we discuss these provision and illustration. Also, we have discussed in yesterday's class. So tomorrow there would be a query of regarding that illustration, or if there is any confusion from that illustration, that would be discussed. So before tomorrow's class, kindly watch the yesterday class. Okay. Sure. Question number 3, and that says, and because it's an examination question, so you will feel exactly like what kind of question would there be in examination. And this is question number 3. Mr. Sandeep, manager in CTL Private Limited at Mumbai. So what I asked in the starting, that before solving any numerical under income tax now, first of all, we should see that whether do we need to calculate under default tax regime or optional. So when there would be information, we would be aware what to do with that information. Compute total income of Mr. Sandeep for assessment year 25-26, assuming he has opted out default tax regime. So optional tax regime is applicable. So all normal exemptions vagara we can provide. So Mumbai furnished the following information for the year ended on 31st March 2025. Basic salary is 55,000. Reading of question is very important to understand how we need to start that question. Basic salary is 55,000 per month and entitled to a commission of 2,500 rupees per month. A company owned accommodation is provided to him in Mumbai. Rent-free house is there. Can you tell me this commission is going to include for calculation of rent-free house salary or not? Is this commission is going to include for calculation of salary in case of rent-free house or not? Nagarja is saying no. Khushi is saying yes. Anyone else? Okay, a lot of answers are there. Ram is saying yes. Almas is saying wooded. Shagufta is saying no. Gulika is saying yes. Kajal is saying yes. Rajveer is saying if house property is let out and vacant, then GAV is ER when actual rent is less due to vacancy. Exactly that, Rajveer. Well said. Kajal is saying yes. And the correct answer is, of course, yes. Because percentage commission on turnover would be included in case of HRA. not in case of rent-free house. Rent-free house does not bifurcate about percentage commission or normal. It says all monetary payments. But DA we have to consider if it is as per retirement benefits. So in case of DA, that restriction is there, not in case of commission. So all kind of commission, bonus, anything monetary is there. We need to include it for the purpose of calculation of rent-free house. Okay, furniture was also provided. 2,40,000 also provided. So basic salary, I can write it down. The basic salary would be 55,000. So yearly it would be 6,60,000 rupees. Clear? Then commission is 2,500. So that would be 30,000 rupees. As I told you, first of all, we have to check all monetary payments need to be rent-free house is a perquisite, and then loan provision, it is also a perquisite, and owner of house property, so that is house property information. So no other monetary payments are there. So now we can taxable the perquisite value. So the first perquisite is rent-free house. Company owned accommodation is provided to him in Mumbai. So the provision for rent-free houses, if it is owned by employer, the concept is different. If it is on rent, the concept is different. So now this property is owned by employer. So we have to see the population also. So how much percentage do I need to take for the calculation of taxable value in this example? Mr. Nagaraja is saying 10. Ram is saying 10. Almas is saying 10. Exactly. We should take 10%. And 10% of my monetary payments. That means 660 plus 30,000. That means 6,90,000. So 10% would be 69,000. Clear? For the purpose of furniture, the provision says in case of furnished accommodation, we will take 10% per annum of cost. That would be 24,000 rupees. Now the loan concept is there. He took a personal loan of 3 lakh on 1st September 24, on which he pays interest 7.75% per annum was charged by the company. The entire loan is still outstanding. SBI rate of interest on 1st April 24 is 12.75%. So 8, 9, 10, 11, 12. The concessional loan is 5% benefit of perquisite on the loan amount. The loan amount is 3 lakh rupees. And because the loan has been taken from 1st September, so we will take from September, October, November, December, January, February, March. 7-month calculation as a taxable perquisite. So that would come 8750. From this aggregate, that would be my gross salary. Now there would be standard deduction, which would be 50,000. And my net taxable salary in this case, 741,750. That would be my taxable salary in this scenario. SBI rate, yes, provided. Any problem in this part of the solution? The salary part we have solved. This is a 6 marks question, and I believe 3 marks related to salary answer, and now balance 3 marks would be for house property. Now the house property component we need to solve in this question. So Sandeep is the owner of a house property in Kolkata, which he constructed. Let me tell you, it is one of the best example of house property. What you are seeing in this case, that could be a question that could be independently asked in the examination for 5 or 6 marks. Just they need to include some interest in this, and they can ask to calculate the house property income under both regime. So that could be a very good question. During the financial year 16-17, the property consists of 4 identical units. He occupied 1 unit for his residence and 3 units let out at a rent of 20,000 per month. Till now, there is no complication. Like we are having one house property that is having 4 units and they are identical. One is self-occupied, 3 are let out and let out for same 20,000 rupees per month each. Nothing to worry till now. So that would be nil. The municipal value of the house has been given 9 lakh rupees. So the total house municipal value is 9 lakh rupees. Correct. And the municipal tax was 20%. Fair rent and standard rent are 750 and 850. So the fair rental value is 750 and standard rent is 850 for the whole property. Now the problem begins from this position. One of the let out unit was vacant for 6 months and we do not know out of these three which one has been vacant. Look, we could solve this question 3 units answer together also. We can take 1/3 self-occupied and we could take, 1/4 self-occupied and 3/4 as let out. And we can solve that answer combined. The combined standard rent of 3 units, the combined fair rent, the combined municipal value, the combined annual value, the combined net annual value, the combined house property income. We could easily find it. But because of this information that out of these 3 units, one is let out and vacant for 6 months during the previous year. Now we have to solve these 3 units separately, or at least we have to separate one unit, which is let out and vacant. The other 2 units we can solve combined, but I would suggest we have to solve all units separately. Interest on loan taken for construction has been given 22 lakh rupees. So we have to solve this question under optional tax regime, and I would like to solve this question on the separate sheet. So you would be able to understand clearly how to solve this question. So let me write it down, the information of the question. One house, 4 identical units. One is self-occupied, 3 are let out at 20,000 rupees per month. One unit out of this is 6 months vacant. The house property questions are having one very beautiful quality, I can say. If you will write down that question and the relevant information separately in short, the 50% working has been done. Because after that, if you able to decode the question of house property, how many units, which is self-occupied, which is let out, which is this, then again, this question very, very easy to solve. And let me show you how. The municipal value, etc., has been given in question. The municipal value of the house is 9 lakh. The fair rent is 7,50,000. I'm just writing down the question. 850 was the standard rent. Okay, now this is the question information what we required. Now I'm going to solve it. So there was a house property. One unit is self-occupied. So if it is self-occupied, the annual value would be nil. Okay, there was one more information regarding it, and that was regarding the interest value. The interest is 2 lakh rupees. So the interest was 2 lakh rupees for this construction of whole house. So now you can see in case of house property, first is self-occupied. And in case of self-occupied, we can claim the interest, and the interest would be 1/4 because units were identical. So the interest value would be 50,000. So loss from this property would be 50,000. Suppose if it is a default tax regime, then what will happen? we cannot claim this interest because under default tax regime, in case of self-occupied property, we cannot claim the interest benefit. Okay. Now there were 3 units. The let out 3 units were there. 1, 2, and 3. Out of these 3, suppose I am assuming this one is vacant. How does it matter? You can assume anyone as vacant. That would be same. So for the purpose of solving let out provision, first of all, we have to take the municipal value and fair rent comparison. 1/4, of course, for every information given. So you will see the municipal value we will take 2,25,000. Fair rent would be 1/4, 1,87,500. So whichever is higher, that would be 2,25,000. Now that higher needs to be compared with standard rent. The 1/4 of standard rent would be 2,12,500. And the provision says whichever is lower we need to take. Now this lower 2,12,500 and the actual rent received, which is 2,40,000 because property was let out for 20,000 each. Now whichever is higher would be my GAB. So this higher would be treated as my gross annual value. That would be 2,40,000 in this case. Now out of this, the municipal tax has been given in the question was 20% of municipal value. So 20% of municipal value would be the municipal tax. Accordingly, in case of this, 20% of this municipal value would be the municipal tax. That is going to be reduced municipal tax 45,000. After that, my value would be 1,95,000. And from this value, we have to reduce standard deduction, 30% fixed, and of course, interest deduction, 139,500. I guess I have combined it. Just wait. 1,95,000 into 30%. That would be 58,500. And interest. Interest would be 50,000. So after that, my value would be 195, 58,500 minus 50,000. That would be 86,500. And of course, same calculation would be for property number 2. So that value would also be 86,500. You have to show in the examination. Don't do this arrow kind of things. Okay. Now the third property, that's the interesting case. In case of vacancy and let out, the let out and vacancy is having a special treatment to calculate the GAV. It says step 1, step 2 would remain the same. Like municipal value would be, of course, 225, no change. Fair rent 187,500, whichever is higher. This higher need to compare to the standard rent, which was 2,12,500, whichever is lower. Now I have to take that lower, 2,12,500 rupees. Now here the thing changes. 2,12,500. The lower value is 2,12,500. Now something is going to change in case of vacancy and let out. In normal cases, when there is no vacancy, we take ARR. ARR stands for actual rent received. In all cases, we have to take actual rent received. But if there is vacancy and let out, then we have to find out AR. And that is annual rent. We have to take the annual rent. So what is the difference between actual rent received and the annual rent. Can you understand the difference between actual rent received and annual rent? Who will tell me the difference between the actual rent received and annual rent? Mr. Nagaraja is saying 6/12. What that does mean, 6/12? I just wanted to understand the meaning in simple way. Mr. Ram is saying in actual, we deduct area, vacant period, etc. Good one. And what should be the meaning of annual rent? What is the difference? In the general, you can understand the word which says actual rent received and the word which says annual rent. We can understand the meaning very easily. Annual means total of 12 full months. Exactly, Mr. Ram. Absolutely correct. Actual rent received meaning that rent which you have actually received. Suppose the property has been let out for 12 months, but there are unrealized rent. Tenant did not pay 3 months rent. You have taken all the steps to recover that rent, but that's kind of a bad debt. You were not able to recover it. So actually, how many months rent you receive? So in that case, actual rent received would be 9 months. Suppose there is a property which is let out for 8 months and 4 months self-occupied. For 8 months, it has been let out to a tenant, and for 4 months, it has been self-occupied. So in case of actual rent received, that would be 8 months rent. So actual rent received, as the name explain itself, the amount of rent we have received, we need to take that. But annual rent does not have any connection with whatever you have received. It would always be 12 months rental value. It is annual rent. What you have received does not matter. It is always 12 months rental value we have to consider for the purpose of comparison. After finding out the lower value out of standard rent and the higher value, now we have to see the annual rent. And now you can see the annual rent would be in this case 2,40,000. Clear? We have to compare the value with annual rent. Actually, property was 6 months vacant. So technically, we have received the rent of only 6 months. But in the case where property is let out and vacant, we have to compare the value with the annual rent, not with the actual rent. And whichever is higher, we need to take. So now you can see the higher is annual rent, and that would be 2,40,000 rupees. But it's not end over here. In normal case, the higher becomes the GAV. But if the vacancy and let out case, the higher value will not become GAV. If this would have been the higher value, suppose this would have been 2,60,000. This is 240. Suppose this is 260. Suppose not 2,20,000. This is 260. So if this value, which has been derived from above calculation, from this calculation, if this is higher in comparison to annual rent, then this would be directly GAV. Nothing to do with it. But if out of these two value, the annual rent is higher. If annual rent is higher, then you have to deduct out of this annual rent vacancy period rent. In this annual rent of 2,40,000, we have already included 6 months vacancy rent, which is actually not received, but we have included because we have to take annual rent. So we have to include it. So now out of this 240, we have to reduce that rent which we did not actually recover. So the remaining would be called now my GAV. So this is actual rent, and if logically you will think, after reducing vacancy, this is now GAV is technically just like actual rent received. Because out of 240, I have reduced vacancy time duration rent. So the balance would be actually what? Which I have received. So this is actually ARR. But if we have taken 120 over here directly, then you need to pay tax on higher value, because if this is not 240, if we consider 120 only here, like ARR, then 2,12,500 would be the higher value. And if it is higher value, you have to pay tax according to this GAV. So this is a beneficial provision from the point of view of assessee. Because in this case, if your annual rent is higher due to vacancy, then you can take the advantage of this vacancy time duration reduction, and taxable value would be 1,20,000. Now, out of this 120, we will reduce the municipal taxes as usual. Nothing new now. Everything is same exactly. 75,000. Then 30% reduction. That would be 22,500. And the interest benefit. The interest is 50,000. That would be 2,500 rupees. House property income. So now technically we have house property income 86,500, 86,500, 2,500 and a loss of 50,000. So net income from house property would be 86,500 125 and 500. Income from house property is this. Salary income we have already calculated. That was salary income was 741750. So total would be my GTI. That was the requirement of question. Okay. I hope it's clear, students, now. So that was question of May 2025. Mr. Ram is asking, sir, I have doubt. Should unrealized rent also be deducted or not? A very good question. I really appreciate your question. Let me show you the full calculation for calculation of GAV in case of vacancy. So in case of vacancy, as you see, the lower value has been arrived. Let me show you the format. Then for comparison, we have to take the annual rent. Now in the question, it was saying that 6 months vacancy is there. Suppose 1 month unrealized rent also there. The rent per month was 20,000 per month. So suppose 6 months vacancy there and 1 month unrealized rent was there. Then how do we need to calculate it? Again, annual rent we have to take 2,40,000. If unrealized rent is there, then you have to reduce it before comparison to this lower value. Only vacancy you can reduce after comparison. But if there is unrealized rent, then you have to reduce it from here. So 1 month unrealized rent is 20,000. So now we will compare it with 220. So still this is higher. If this is higher, now we reduce vacancy time duration 120. So the 1 lakh would be my GAV. Now suppose 1 month unrealized rent, 1 month self-occupied. Understood? Out of these 12 months, property 6 months vacant, 1 month unrealized and 1 month self-occupied. So what would happen in this scenario? The lower value would be 2,12,500. No change in this. But now annual rent, of course, we will take 240. Except only vacancy. Except vacancy. If any rent which has been included in annual rent in this 12 month, which is not actually recovered to us, is going to be reduced. So 1 month unrealized rent value is going to be reduced 20,000. And 1 month self-occupied. Because if you are occupied that house for your self purpose, so technically you are not going to receive any rent. So 1 month analyzed rent value need to be reduced and 1 month self-occupied rental value need to be reduced. So technically your value is now 2 lakh rupees. And now you can see, because higher value is this, then your GAV would be 2,12,500 And now you cannot reduce vacancy from this. Vacancy can be reduced only if this value is high. Now there is no such case, then GAV would be directly 2,12,500. Now I have a question from all of you. Suppose this value is 2 lakh. And now suppose this lower value also 2 lakh. Now they both are equal. So we have understood if this is higher, this would be GAV. If this is higher, then we can reduce the vacancy time. Suppose if those both value is equal, 2 lakh and 2 lakh. Now which value we should consider? Because if you consider the lower value case, then this would be directly GAV. And if you consider this case, then we can reduce the vacancy times 6-month rent. So your remaining rent would be only 80,000. So from the point of view of income tax, this is good that we should consider this value. But what should be done? If both values are equal in this case, which value we should take? Any idea? You have gone through with this concept? Have you studied that value that if both are equal, then which value we should take? Yes, Vidushi, you are right. Annual rent means full month's rent. Almas, I guess you were to in my normal class. We have when we are taking VLC, Almas were there actually. So the correct answer that if both values are equal, then we will take this value. This 2 lakh would be taken. In equal case, the benefit is to the assessee has been given. So now out of this, we can reduce vacancy rent. So the remaining 80,000 would be your GAV. So that is a complete case of income from house property when property is vacant. I hope it's clear. Sure. Moving ahead. Next question, what I would like to discuss with you is MTP question. So Mr. Rishabh, question is there in front of you students. Rajveer is saying no, sir, but actual. What does that mean, Rajveer? Regarding which point you have answered it? Okay. Fine. So moving to our MTP question. Question number 1. Mr. Rishabh, a salaried employee in a private company, provides you with the following information for the year ended on 31st March 2025. So what we need to check initially in the question? Whether salary need to be calculated under default tax regime or optional. Exactly, Mr. Ram, बिल्कुल सही बोला. तो हमें वो सबसे पहले चेक करना है that salary needs to be calculated under optional or default tax regime. And suppose if in the question range salary has been given, like suppose in this question it would have been given like this 75,000 dash 1,000 dash 85,000. If that has been given, then please read the question very carefully that maybe somewhere it has been written that salary is going to be due in next month. So if it has been mentioned that salary is going to be due in next month, then of course you have to calculate the salary assuming that it has been due in same month, and then you have to +1 and -1 concept need to be applicable. Okay? Because if you did not read that, if you start solving thinking the salary is due in the same month, and suppose somewhere over here it has been written that it has been due in next month, then your whole calculation would be wrong. You know why? Because your basic salary would change. And once basic salary needs to change, you have to change each and everything. Okay? So, देखो भाई, compute the taxable salary of Mr. Rishabh if he has shifted out of the default tax regime. So, first thing, check first that whether it's default or optional. And the question is saying, Rajveer is saying house rent when equal points are okay. Exactly. When equal point, then we have to take the value which has been considered on the basis of annual rent. Range salary is not given, so that fear of due in next month, etc., has been gone. One by one, we will read the points and we will solve it. And one more step I have told you today, that how to solve salary question. देखो first हो गया optional tax regime or default tax regime check करना, and that is not for salary, that's for all heads of income, all heads. Second हो गया salary में if range salary, then you have to check the due in same month or next month. If question is silent, always assume it's due in same month. Third thing, also one more thing I have told you to improve your marks and save your time in the examination. What it is? What is the third thing you should consider when you solve your salary question? Monetary together. Very good, Mr. Ram. You're doing so good. Yes, first of all, calculate monetaries. The monetary points need to be arranged firstly, like basic, bonus, etc. So that will help you to calculate rent-free house monetary salary. Monetary salary is one more use to find out whether employees is specified or non-specified. So that's why it will help you in majority when you need to calculate rent-free house salary. So in this example, first point we are taking basic salary, 75,000 per month. And second point, you can see from 1st February 2025, basic salary increased to 85,000 per month. So from February and March, it's 85,000. And from April till January, it would be 75,000. So 75,000 is for 10 months and 85,000 for 2 months. So that would be 7,50,000. And this is 1,70,000. So my basic salary would be 9,20,000. Clear, students? Any problem? Okay. Now point number 2, it's saying dearness allows 50% of basic salary and 40% of DA forms part of retirement benefit. Now let me give you a very interesting trick. So you won't be able to do mistake while calculating DA for different purpose. So dearness allowance, the question says 50% of basic salary. So that would be 4,60,000. Now always do one thing when you write it down DA, and if it is as per term, write it down over here 40% T or 30% T or 25%, whatever amount is for term DA, you can write it down over here. So you will always remember that. It's not clear. Let me change the color. So it's 40% T. So whenever there is a calculation for suppose the house rent allowance, you will automatically recall that I do not need to take full 460. I need to take only 40% of this DA. If that is a calculation of gratuity, leave encashment, VRS, rent-free house, provident fund, only DA as per terms required to be included. And if it has been mentioned over here, like you have written down the term or the T as a mark, so you will not do the mistake that either you would be able to, generally students do one thing, they include the whole DA. They forget that it is not full DA as per term, or maybe they are not able to include that DA at all. So write it down this always in front of DA, that will recall you what percentage of DA I need to include for calculation like HRA, etc. Okay. Now third point. Contribution of employer to recognize provident fund. Is it a monetary payment or not? Who will tell me? Is it a monetary payment or not? Of course, no. Correct. So we will not consider it yet. We will find it out whether all monetary payment has been considered or not. Then professional tax paid, again, it's not a monetary payment. It is again a perquisite. Professional tax paid 2,200, out of which 1,800 was paid by employer. So obligation of employee met by employer. All kind of reimbursement, etc., would be regarded as perquisite. Now, house rent allowance. Yes, this is my monetary payment. He paid rent of 17,000 per month for accommodation in Bangalore. So now you have to calculate house rent allowance calculation. For the purpose of house rent allowance, first point is HRA received. That would be 16,000 into 12. So 1,92,000. Then the second point says rent paid minus 10% of salary. Rent paid has been given 17,000 per month. So rent paid would be 2,04,000. Now for 10% of salary, I have to take the basic salary and DA as per terms. So my basic salary is 9,20,000. And now you will see the power of writing this 40% term. I have seen that in multiple cases. When students do not write this term concept, they by mistake either include full 460 for the calculation of HRA, or they ignore 460 completely. But because if you write it down over here, suppose it is full non-terms, then we will write it down NT. NT means non-term. Suppose it is 100% term, then we'll write it down 100% T. So that mistake would not repeat in the examination. So out of this 460, we will consider 110,400 for the purpose of calculation. And after that, you will see we will have 93,000, 110,400, 184. Sorry, this is not 40. This is 1,84,000. The 10% would be 110,400. So rent paid minus 10% of salary, that would be 93,600. And because Rishabh is in Bangalore, so the third point will say we need to take 40% of salary. That would come 441600. Out of these three values, the lowest is 93,600. So that is going to be exempted. And the balance taxable value would be 98,400. So it's a simple HRA calculation. Nothing to worry. It's very simple. So now we have completed the HRA, then all other are perquisite. So now we can solve the perquisite from point number 4. Whatever you are already solved in the examination, kindly tick those points. So you will not actually leaving or forgetting anything perquisite or any point for the purpose of treatment. So now because we have solved this perquisite of HRA, now provident fund provision is there. Provident fund contribution, point number 4. It says Bangalore is metro city. No, metro city has been defined as DMCK, Delhi, Mumbai, Kolkata, Chennai only. Only for those 4 we have to take 50. For all other we have to take 40. Now contribution of employer to recognize provident fund on account of employee 18% basic salary. So now contribution is 18% of only basic salary. So that is my employer contribution, 18% of basic salary. And basic salary is 9,20,000. So the percentage 18 would be 1,65,600. And now we have to reduce 12% of salary. Can you tell me what is the meaning of 12% of salary in case of provident fund provision? What we need to consider? What content do I need to consider for calculation of perquisite in case of employer contribution. Because up to 12% of salary, it is exempted. That is basic salary. The same we need to take for the purpose of HRA and percentage commission on sale. So there is no percentage commission on sale has been given. So basic and DA and 12% of it, if you will calculate, it would be 132,480. Taxable value would be 33,120 would be there. Now professional tax paid 2,200. Out of which 1,800 was paid by employer. So whatever has been paid by employer, professional tax, that is my perquisite obligation of employee met by employer. That is going to be taxed. Now point number 7. Loan of 2 lakh was taken from employer on 1st July 24 for medical treatment of his brother of tuberculosis treatment. Interest charge on such loan is 5%. The entire loan is outstanding as on so and so. No medical insurance has been taken for his brother. SBI rate of interest is 1st April 2024 was 11%. So how much we need to tax it? How much interest we need to tax as taxable value of perquisite? Mr. Ram is saying 6. Anyone else? Almas is saying loan for medical treatment is exempted. Mr. Ram, what do you think about it? That's the correct answer. Loan is exempted if it has been taken for a specified diseases treatment for employee or his family member. That is exemption which is applicable in case of loan. So in case of loan, there are 2 exemptions when there would not be taxability of perquisite. One is when the loan has been taken for specified diseases treatment. Then there is no limit. It is exempted perquisite, whether interest charged or interest not charged. What is the second exemption in case of loan? There is 2 exemptions. Almas is saying correctly, it's 20,000. If the loan amount is only up to 20,000 rupees, only 20,000, then for any purpose, if it has been used, there would not be any taxable. So remember one thing also in your examination, it is not required that all information you need to do something. Examiner is checking you, whether you know the provision or you have actually is in the examination to solve anything, even which is not need to solve. So suppose examiner has write it down 1, 2, 3, 4, 5 lines for you, just to check that is it compulsory for you to solve all the information without even thinking about the provision. You have seen, okay, there's a loan, there's a rate of interest, SBI rate has been given, let me solve it. No, this is not the way. First of all, you have to think about it, whether the provisions are applicable, the information given, whether does it needs the solution or not. So at times it is also important to leave the information even without solving, because provisions are not applicable. So in this case, no taxability. The answer would be non-taxable. Okay. Now, last is LTC provision, I guess. So leave travel concession given to Rishabh, his wife and 3 children. One daughter aged 6 and twin son aged 4. Cost of air ticket economy class reimbursed by the employer 20,000 for adults and lump sum of 25,000 for 3 children. Rishabh is eligible for availing exemption this year to the extent it is permissible under the Income Tax Act. So they are saying all other informations are correct. You just need to see 20,000 LTC is for Rishabh and wife and 25,000 for 3 children. So you need to tell, are they all exempted or not? So let me tell you, this is non-taxable. Out of these 3 children, what is the maximum number of children those can claim exemption? under LTC, I guess section 10, subsection 5 is there. So how many children can take exemption under LTC? Nagar just saying 2. Mr. Ram is saying 2, but here twins in second delivery. So all exempt. Very good, Mr. Ram. Kajal is saying 2. Students, the answer is 2, but there is a exemption, or you can say there is a advantage. If twins have taken birth after the birth of single child, then those twin also can take the advantage. So in this case, all three can take the advantage because daughter age is 6 and twins age 4. So that means single child takes birth first. After that, these two child takes birth. So if single child takes birth first and then twins takes birth, then all of these three can take exemption. Suppose if I am reversing it, 4 years is the age of one daughter and 6 year is the age of twins. So that means who takes birth first? Twins. So if twins takes birth before the single child, then only twins can take the exemption. The single child amount needs to be taxed. So suppose if this question 4 year is the age of daughter and 6th year the age of twins, then out of these 25,000, one third it's going to be taxed, but not in this example because in this case everything is exempted because twins takes birth after the birth of single child. Okay, so in this case this is not going to be taxed. So you can calculate it. The total value would be 15,13,320. You can give the deductions of 50,000 and 2,200 deduction for professional tax paid. So that was MTP number 1 question, and now time for a short break. So Mr. Bhargav, can we go for a short break? Can we have a short break, Mr. Bhargav? Oh. Bhargav ji, can we resume? Bhargav ji, can we resume? So welcome back, everyone. I believe you must have your coffee, tea, etc. So we were discussing the provision of salary and house property in divisionary class. Mr. Ram is saying in EPF calculation, employer contribution 18% is calculated in basic and 12% exemption is calculated in basic and DA, right? Yes, Mr. Ram, because the question has actually said that. As per the question, you will see the question says that the contribution of employer to RPF on employee 18% of basic salary. It has been mentioned that on which amount the contribution has been made. So because it's on 18% of basic salary, that's why we have taken 18% of basic salary. But for the purpose of exemption of 12%, the salary meaning as per the provision is basic plus DA term and percentage commission. So for the purpose of exemption, we have taken basic salary and DA as per terms, which is given in question. But for the purpose of contribution, 18% we have taken, which has been given in the question itself. I hope it's clear now. So that was MTP series question 1. Now we are moving to one more question from this MTP, that is question number 3B. That is MTP number 1. Yes, Mr. Ravi. That is question number 2. Exactly. But there was a salary question also. Yes, exactly. So Mr. Ravi are resident in India. Now this question also a composite question of salary as well as house property. As I always says, first of all, check whether optional tax regime or default tax regime. During the previous year, etc., Ravi earned salary income of 18 lakh and compute total income of Mr. Ravi for assessment year so and so under default tax regime. So we have to solve this question as per default tax regime. Now the information which has been given is majority for calculation of house property. Because for the purpose of salary, only salary income over here given 18 lakh. And because it is under default tax regime, so I have to reduce standard deduction of 75,000. So my salary income would remain 17 lakh 25,000. So salary part has been sorted over here. But we have to solve this house property provision over here. Mr. Ravi, a resident in India, owns 2 house property. And as I have told you, in case of house property, if you are able to decode, the question, you actually solve 50% of the answer. So there are 2 house property. I'm just writing it down, the information in a summary way. 2 house property, 1 and 2. One in Delhi, another in Kanpur. This is Delhi, this is suppose in Kanpur. I should write it down over here. This is Delhi, this is Kanpur. The property in Kanpur is self-occupied. That's a very good news for us. Mr. Ravi, however, the property in Delhi is let out. Got it? So this is self-occupied, this is let out. The particulars of the Delhi house for the previous year 24-25 are as under. Okay, standard municipality fair and rent receipt, municipal taxes paid by Ravi. Got it? No information to bother us. Municipal tax paid by Ravi on thus 10th 6 2024 for Kanpur house municipal tax has been given 3,500. Ravi has taken loan from SBI of 35 lakh at 12% per annum. In April 21 for purchase of Delhi house. So this loan is for Delhi house. The stamp duty value of the house is 40 lakh. Mr. Ravi purchased a plot in Kanpur in May 2021 and the construction of the Kanpur house was begun in June 2021 and was completed on December 22. Mr. Ravi took a loan of 25 lakh 10% on 1st July 21 for the construction of this house. No repayment has been done so far for both the loans. So as per these information, we have to solve the question. Now, because it's a self-occupied property, Kanpur property is self-occupied. So the annual value would be nil. And because we are under default tax regime, so technically no interest deduction would be allowed. So the property value of Kanpur would remain nil. This is the good thing in case of default tax regime. In case of default tax regime, if the property is self-occupied, the answer would be nil always. You do not need to do anything because nothing is going to be allowed in case of default tax regime. So Kanpur property value would remain nil. Now the Delhi property value, municipal value, fair rent, whichever is higher, 2,05,000. Need to compare with standard rent, whichever is lower, 172. Needs to compare with actual rent received, this is 180. So whichever is higher. So technically my GAV would be 1,80,000 rupees in case of Delhi house property. 5% municipal value, municipal valuation, municipal tax. If only 5% has been written, automatically you should assume that is on municipal valuation. Okay. So 5% would be 10250. So that would be 169750. 30% fixed deduction 50925. Now the interest value we have to calculate. For the purpose of Delhi house, you can see a loan of 35 lakh at 12% has been taken. So the interest value on 35 lakh at the rate 12% would be 4,20,000. So my loss from house property would be 301175. This is my loss. And now, in this case, assessee cannot claim any other deduction because we are under default tax regime. So we cannot claim any deduction. Even we cannot set off this loss from income from house property because under default tax regime, you cannot set off house property loss from anywhere. So no loss set off possible, no deduction, no even carry forward of loss. You cannot even carry forward this 3,1175 loss. That is dead loss. So my GTI answer would be 17,25,000. That would be my GTI and that would remain my TI also in this question. I hope it's clear. So now moving on to MTP2. If there is any query, student, please let me know. In case of MTP2, we have question number 2 for the purpose of solution. That is Mr. regarding Harsh. This is. So in case of Mr. Harsh, now you will see there is again a question in which range salary has been given. And when there is a range salary, I've told you that you should check it out, Hamesha, that whether it's due in the same month or it's due in next month. And of course, before that, whether we need to solve this question under default tax regime, etc. So in the question, they have asked you to calculate the value of rent-free accommodation, the deduction of insurance premium. So definitely that means we have to solve this question as per optional tax regime. perquisite value of car we have to calculate in this question. So there are three questions we have to answer from the above information. So you can see the scale is 35,000, 3,500, 65,000. He has been provided unfurnished accommodation. There is no information that the salary has been due in next month. So we can find out the basic salary. Because we have to find out the rent-free accommodation value. So of course we have to calculate salary. Monetary payments, all we have to find out. And because this range has been given from 1st February 2024 point of view. So from 1st April 24 till 31st January 25. For these 10 months, the salary would be 35,000 per month. And from February and March, it would be now 38,500 after the increment of 3,500. This is for 2 months. This is for 10 months. So my basic salary would be in aggregate 4,27,000. Okay. Now the DA information has been given. DA 40% of salary forming part of retirement benefit. So how much DA is as per terms of employment, student, in this case? How much DA is as per terms of employment? The total value of DA is 170,800. So how much is for terms of employment? Of course, it has been written 40% of salary is DA forming part retirement benefit. So how we will write it down for the purpose of examination? Just write it down T. T means completely as per terms of employment. Okay. So we have found out the DA and now he is given rent-free accommodation. Information has been there, but first of all, we have to see whether there is any monetary payment left. This is rent-free house information. Okay. This is car perquisite. Again a perquisite. It's a health insurance. Again a perquisite. So these are the monetary payments we have. But there is a crux in the question. What is the crux? He is given an unfurnished accommodation on 1st May 2024, which he occupied only from 1st October 24. The company pays lease rent of 5,000 per month. Can you tell me this property is on rent or is it on owned by employer? Because of course the company is paying lease rent. So that means, of course, correct Mr. Ram, correct Mr. Gulika, correct Almas. Very good. So Miss Gulika is correct, Ram is correct, and Almas also correct. It is on rent, and because it is on rent, so what is the taxability criteria in this case? 10% of salary or rent paid, whichever is lower, needs to be taxed. Got it? Khushi is also saying rent. Absolutely right, Khushi. Now, for purpose of rent-free house, now can you tell me for which duration I have to calculate the salary, which is monetary? Because unfurnished accommodation has been given from 1st May, but he occupied from 1st of October. So do I need to take it from May till March or from October till March? Khushi is saying from October. Gulika is saying October. Ram is saying October. Almas also saying October. Absolutely right. Well done. From October till March, we have to calculate. So October, November, December, January, February, March. So total 6 months calculation we have to done. But these are the 6 months which we need to take from October till March. And you can see my salary was different. My salary was in February and March. It was 38,500 into 2. And from April till January, that was 35,000 for 10 months. So from till October to March, we have to take February and March salary, of course. That was 38,500. And for the remaining 4 months salary, of course, before February, that would have been 35,000. That is for 4 months and this is for 2 months. So my salary would be 2,17,000 in this case. And DA 40% I have to take for this value. So that would be 86,800. Total salary monetary for the purpose of rent-free house would be 3,30,800. Now 10% of this would be 30,380 or rent paid by the company, which was 5,000 per month. So for 6 months, that would be 30,000. So the lower would be taxable value, and that would be 30,000. So the correct answer would be option number D. Any confusion in this, students? If you learn provision correctly and if you practice them, I believe you would be able to find out the correct solution. Mr. Ram is saying, sir, how it's 86,800. DA was given in the question, it's 40% of basic salary. So I have calculated the basic salary from this information, 2,17,000, and 40% of this would be 86,800 rupees, like that. Got it? Okay, cool. Next is Mr. Harsh would be eligible for deduction in respect of health insurance premium paid during previous year 24-25. Now this is section 80D provision. This is not salary provision, but I believe you must have gone through with all the chapters right now because we are in a revision part. So I wanted to ask all of you how we need to solve this point. He pays lump sum premium of 1,50,000 towards health insurance of self and his wife for 48 months on 1st October 2024. By account pay check, he also contribute 150 towards PPA. So he's asking about the deduction for health insurance premium. Health insurance premium, he paid 150 via check on 1/10/24 for 48 months. So can you tell me how to solve this question if you have gone through with section 80D provision, students? What is the formula to find out the eligible deduction in case of health insurance premium if the premium has been paid for more than 1 year in lump sum? There is a specific formula for it, a very easy formula to calculate that deduction which is eligible for the purpose of section 80D for this previous year. How much it should be? So do not give me the answer, the amount. I just need the formula. How do we need to calculate it? You have the question in front of you. You have the solution, but do not give me option A, B, or C, or D. I wanted to know the formula to calculate or to solve these kind of information questions. Khushi is saying, very good. Premium paid 1 divided by number of previous year for which premium was paid. Absolutely right, Khushi. Exactly, that is the formula. The formula says the premium amount multiplied by 1 upon the number of year for which premium is in force. And you can see he has paid premium for 48 months on 1st October 24. So the advantage of premium for health insurance he will have for year 25, 26, 27, 28 and 29. For 5 years, he will have that benefit. So technically, for 5 years, he can take the benefit of 30,000 rupees insurance premium. But 80 days having the maximum limit is 25,000. So the benefit cannot exceed 25,000. So the correct option is option number C in this case. So there is section 80D, I guess, subsection kuch 4 is there. So you can go through with the provision. It has been specifically mentioned, I guess, at the last, the section 80D from your study, you will refer. And at the end of that provision of section 80D, after the example, etc., there's at last it has been mentioned over there. So these are very simple and small things you have to retain in your mind for the purpose of examination. Now they are asking the perquisite value of car that should be charged in the hands of the Harsh. So let's see the car perquisite treatment. He has been provided a car of 2000 cc capacity, which is used by him for private purpose only. So the car has been used only for private purpose. The actual cost of the car is 8 lakh rupees. The monthly expenditure of car is 5,000, which is fully met by the employer. So in this case, this is the case when car has been provided by the employer to the employee and car has been used for private purpose only. If the car has been provided by the employer and expenses also met by the employer, and if car has been used for only private purpose, what is the taxable value? What is the provision says? What should be the taxable value of that car perquisite? Again, I do not need the answer. I just need the provision in one line. That if car is owned by employer, so conditions are like this: car owned by employer, expenses paid by employer, car used only for private purpose. So can you tell me what amount do I need to consider as taxable value in this case? And because it's exceeding 2000 cc, Nagaraj is saying exceed 1.6, so 2,400 rupees per month plus driver 900 rupees. Okay, Gulika is saying cost. Rama is saying expenses incurred 2,400 rupees per month. Okay. Anyone else? If the car has been used for private purpose and if the expenses has been also met by the employer and the car also provided by the employer, then as an employee, I have two benefits. I am having a car and I am also availing the expenses. So the car taxable should be there and expenses both. So in case of car, because the value has been given 8 lakh, the provision says 10% needs to be taxed if car has been utilized for personal purpose. That 2,400 rupees per month or 1,800 or 900 would be applicable when it has been used for both purpose. But if it is only for personal purpose, then the car value 10% and actual amount of expenditure 5,000 per month. So that means 60,000. Both needs to be taxed. Total value would be 1,40,000 need to be taxed. That is as per option number D. So D is the correct answer in this case. I hope you got it. Okay. Clear, students? This provision. Next is second question. Mrs. Anjali, a US citizen, is a resident and ordinary resident in India. So if somebody is a resident and ordinary resident in India, that means everything is going to be taxed. Whether income in India, whether income outside India, everything is going to be taxed. For the financial year 24-25, she owns a house property in Chicago, USA, which she uses as her residence. The annual value of this property is $20,000 with the exchange rate assumed 75 per US dollar. In addition, She took ownership and possession of a flat in Surat on 1st July 2024, which she used for self-occupation during her stay in India. The flat was occupied by her for 7 months in the financial year. The municipal valuation of that flat has been given as follows. 3,84,000 municipal value. Fair rent is 420. She's paid property tax of 16,200, sewerage tax of 1,800 to the Corporation of Surat. Okay. We have to solve this question opting of shifting out of the default tax regime. That means we have to solve as per optional tax regime. One more house information is here. For the purchase of the Surat flat, she had taken a loan from Standard Chartered Bank in June 2022. The interest on the loan amount to 49,200 for that period. Before 1st April 2024, 50,800 for the period from 1st April 24 till 30 June 2024, and 1,31,300 for the period from 1st July 24 to 31st March 25. Additionally, she owned a house property in Ranchi also, which was sold in March 2023. In respect of this property, she received arrear of rent amounting to 60,000 rupees, which had not been previously taxed. So how many houses she have? Technically, she is having 3 houses. So we have to solve the question for all 3 houses. House 1 was in US, and that is for self-occupied purpose. House in Surat was also using for self-occupied purpose, and one more house that was in Ranchi that she sold during the previous year in respect of she was sold in March 2023. That means before our previous year. But from that house she received arrear of rent. So under house property, there could be 2 houses which you are using for your self-occupied purpose or as vacant. And the annual value of maximum 2 houses could be taken as nil if that not has been let out actually. So this US property and this Surat property, she has not let out at all. So technically they both are self-occupied, and 2 self-occupied property exemption or the value could be taken as nil. So annual value of both property would be nil. There is no loan against US property. So technically there is no loan deduction. So the US property value would remain, income from house property would remain nil. The Surat property is self-occupied for 7 months, and for balance month, 5 months, it is vacant. So no issue, still the annual value would remain nil. But yes, we can claim the interest deduction in case of this property. Now the interest has been given in 2 parts. It says the interest before purchasing this property is 49,200 before purchasing that property. And after that, the interest value has been given 50,800 and 1,31,300. So out of this value, you can see these are our current year interest, and this is called pre-construction period interest. Can you tell me the treatment of this pre-construction period interest? How much it is going to be allowed in this case? Mr. Ram is saying 1.5. Very good. Anyone else? The good thing in the question, the pre-construction interest and the current year interest has been given, already given. We do not need to calculate it. So it's a very good thing. For the purpose of solution, the interest value has been given in the question. So Mr. Ram is saying it's 1/5. Anyone else? Absolutely correct. The correct answer is 1/5. So we have to take the 49,200 1/5 value. That would be 9840. And these are my current year values. So the total interest would be 1,91,940 rupees. That is going to be allowed from this. Up to 2 lakh rupees we can claim. So the loss from this house property would be 1,91,940 rupees. Now the Ranchi property has already been transferred in 2023. But we received arrear of rent of rupees 60,000 from that property in this year. So arrear of rent also going to be taxed under income from house property. It does not matter whether you are still the owner of that property or not. It's kind of recovery of bad debts. So in case of recovery of bad debts under PGBP, whether you are running that business or does not running that business, it is still going to be taxed under your PGBP head. At the same way, unrealized rent or arrear of rent is having the same treatment. If you are receiving the rent, so whether you are having that property or not, in both cases that is going to be taxed under income from house property, whether it's unrealized rent or whether it is arrear of rent. But you must have gone through that there is an advantage. There is a deduction which would have been provided if you have received arrear of rent. So how much deduction you can claim in case of recovery of arrear of rent, students? What is the percentage of that deduction we can claim in case of arrear of rent? Who will answer that? We can claim a certain percentage. Yes, Ms. Gulika is correct. 30% we can claim as a deduction. So 18,000 would be the deduction. So the balance 42,000 would be income from house property and loss is 191,940. So after adjusting that, my income from house property would be 149940. That would be income from house property in this scenario. Clear, students? So Khushi is saying if only purchase is made, but construction is not actually taking place, since will pre-construction period interest be allowed? If there is no construction, then there would not be any pre-construction period would be there. So if you are going to purchase a completely constructed property, then there would not be any pre-construction period would be there. Okay. So because there is no construction, and if there is no construction, there could not be any pre-construction period. Next is Mr. Ram. By looking at question number 1, first time it was fearful, but if we read carefully and recall provision, I find easy now, sir. Let me tell you one thing to all of you. Numerical actually having a very, very good feature within themselves. They actually try to explain you that look, this information has been given, you have to do some treatment of me. Like in this question you can see there is arrear of rent 60,000. So they actually trying to ask you that we are here, please come and solve us. So it is not that difficult. The problem is in two things. Either we are not going to understand the question correctly. Whenever we see a huge question, like if you see question number 2 in the examination, and you will read like it's in Chicago, dollars 20,000, exchange rate 75 USD, you might be getting nervous because you are not understanding that even these information has nothing to do in my question. Nothing. We just need to solve it by writing down nil. So even institute know that in that 50 marks of paper of income tax, they will ask you one or two difficult question, and all other question would be not that difficult. If a question is having 5 marks, it cannot be difficult in any way. Like this kind of question would be for 5 marks in the examination, 4 or 5 marks. Okay. So a 4 marks, 5 marks question cannot be difficult at all. Impossible. It cannot be difficult. If you find it difficult, so there are only two reasons. Either you are not understanding the question properly, you are just nervous, you are reading, you are not read the provision correctly. You are actually did not learn the provision correctly, you did not practice those kind of questions. Only there are only two reasons a student get nervous. So the first point, that you are not reading the question correctly, that you can rectify easily. Just be calm. Focus on the question. As I've told you, there are some component of all questions. Like if there's any question, first of all, find it out whether this is a default tax regime, optional tax regime. When you are focused on default or optional, so if it is a default tax regime, a lot of problems solved, because if it is house property, then self-occupied property case is nil directly. Nothing to think about it. If it is a salary question, still you do not need to give an exemption of like HRA, etc. Because these exemptions are not available in case of salary head of income. So first of all, understand the question, make a plan to solve the question. And one by one, just take the component of the question. What is the problem for all of us? When we look at a question, we trying to solve it instantly. When there's a question in front of you, generally student thinks, okay, let me think how to solve, how to get the answer. That is not the correct way to solve any question. It is just like that when you are entered into CA course and you are thinking to clear directly final course, how I would be a CA, okay, final kaise clear hoga. So that is a wrong approach. Now, first of all, you have to think about foundation. Even before that foundation examination, you have to think about studies. Even before that studies, you have to think about what is my syllabus, what are the components, what are the subjects, how I will make a schedule to for studies, how I will revise it, when till I will complete it. So these are the small steps you have to take to complete any journey. But what we exactly do in the examination hall, we saw the question, we start thinking how to solve this. Do not try to solve it. Just find out the components you need for the purpose of solution. Like in a salary question, what is difficult? First point is you just need to find out the basic salary. So find out the basic salary, write it down. Then DA, write it down. Then commission, write it down. There would be 2 or 3 difficult components only, in my opinion, in a salary question. Either there would be rent-free house calculation. One calculation could be, which could be difficult, is car perquisite. Everything else in salary is not complicated at all if you have learned the provision. The problem is, the major problem, we do not understand the question, or we are in a nervousness stage that we just need to find out the correct answer. That is not the correct approach to solve any question. Like in PGBP head, mostly students think that question cannot be solved correctly, but that is wrong. If you'll ask me, then out of capital gain, PGBP and salary head, I found PGBP head is most simple head. And what is the good news? The first compulsory question of 15 marks generally asked from PGBP head majority. The majority of part of that 15 marks, almost 10 marks, is connected or related with PGBP provision. And PGBP provisions are very, very easy to solve. What do we need to do? We just need to add something. We just need to deduct something. Or we just do not need to do anything with something. Like we need to take the net profit as per accounting provision. And then either we need to add any information or just need to reduce that information. That's it. You do not need to calculate car perquisite kind of calculation in PGP. You do not need to calculate gratuity kind of calculation in PGP. Not like leave encashment, not like even HRA. there are some amounts you just need to decide whether do I need to plus or minus, or just need to ignore it. Yeah, there are simple provision like TDS, you have to take 70% deduction, but still it is very, very easy in comparison to capital gain and salary questions. We just nervous by seeing a huge question in front of us, and we think, okay, this cannot be solved. I promise you, PGBP is the easiest topic out of capital gain and salary and PGBP. So let me see if there is any more query, students. Mr. B. Reddy, Surat flat was purchased and we claimed reduction of because the preceding year interest value has been given in that. So maybe we have purchased, but there is, because the preceding year construction interest has been given, so that's why we have considered it as a pre-construction period. If it has been written directly that there is no pre-construction interest, then I am not going to reduce it from our value. I remember your quote, sir. Thank you so much. Yes, that's a very interesting. Revise twice. That's my advice to make you wise. There is no replacement except the revision. Revision and practice. And let me tell you, you will clear your any group or level of CA examination. It does not matter how intelligent we are. It's just the correct planning and the determination to do something that can make anything possible. Okay. So I guess there is no more queries. So Bhargav ji, can we close the session? Welcome, Mr. Ram. Welcome, Mr. Reddy. Welcome, Gulika. Nagaraja, welcome. भार्गव जी आप हैं इधर? कॉल करता हूँ. Okay, we can close the session, Bhargav ji. It's done. Thank you. कोई बात नहीं, it's okay.